Hello, Carmen Molitor with the Pinnacle Team at RE/MAX Properties. Happy New Year to everybody. I'm here to talk about the real estate market for 2024. So the market last year continued to, I'd say, normalize. We sold less units last year than we've sold really since 2014. We sold a total of 11,510 units. Our active inventory, even though it ended the year pretty low at 2,500 units, which by the way was still a 31% increase over last December, really is a bit distorted from the truth of what happened last year, because over half of the year we had active inventory in the 3,000 to 3,400 range. We haven't seen that much inventory in the market since 2015. I personally am pretty excited about that. It's nice to see things normalizing a little bit. As you might imagine, it's taking longer for houses to sell. Our median days on market is 41 days. Again, we haven't seen that time to sell since 2014. And then our average sales price, we ended the year at $545,970. That's down from our peak in July at $571. It was up about 5% from last December. But again, other than April, where we were 6% over the prior year, every other month last year we saw either a decrease in value, relatively flat appreciation, or whatever appreciation we did see, it never exceeded 4%. So that is definitely a normalization happening in the market. Our median sales price was $485, up 6.5%. But again, the bulk of the year, we didn't see median prices go up more than 4%. What's not reflected in that data is seller concessions. And what are seller concessions? That's where the seller, at time of closing, out of their closing proceeds, pays money towards the buyer's closing costs, prepaid items, and then maybe a rate buy down. 68% of the transactions last year had seller concessions. Of those, 22% were between $5,000 and $10,000, and 15% were between $10,000 and $15,000, meaning the sellers are paying anywhere from $5,000 to $15,000 for the most part to help the buyer either buy down the rate or pay for closing costs or prepaids. The sales price to list price ratio, we're seeing about 99%. In other words, our sellers are getting about 99% of their asking price, but that's not including the seller concessions. So if you include the seller concessions, we're really sitting at 96%, 97%. And the reason for that, really, it's all about interest rates. The mortgage interest rates, they're being stubborn. They were stubborn last year. We topped over 7% again. They're pretty much, we're in the mid to high sixes for most of the year. And that has such an impact on your payment. I mean, our monthly payment has gone up in the last 10 years by 277%. A lot of that has to do with the interest rates. A lot of that has to do, of course, with the pricing. Some of it has to do with the cost of insurance and the cost of and property taxes. So, you know, our wages haven't gone up 277%. We've gone up about 48% in the last 10 years, or 8 years actually, because I didn't have 2024 data on that. Anyway, I personally think it's healthy that we're seeing some normalization. Maybe not great for our sellers, where it's taking a little bit longer to sell and they're not getting as much as they'd hoped for. But most people have quite a bit of equity in their home because of the appreciation over the last several years. We're definitely exceeding the normal, which is 4 to 5% appreciation year over year. So for the most part, I think sellers are pretty happy with what they're getting when they sell their house. And buyers, it's not an impossible task. If rates are at 6.5%, we've had a lot of success negotiating with sellers to pay for your closing costs and your prepaids, and or to buy your rate down and get you into the mid fives and sometimes even lower. And so it's not an impossible task as a buyer right now. It just requires some negotiating, and that's what we're here for. So what do I expect for 2025? I don't know if you saw it, but there was an article in the Gazette that referenced a study from Realtor.com, where Realtor.com said that they think the Colorado Springs market is going to be the hottest selling market in the entire country in 2025. And they're expecting us to see almost a 28% increase in sales and almost a 13% increase in appreciation. I don't think I'm alone with my colleagues that say that just doesn't sound realistic given all the market conditions, because the experts are suggesting or predicting that interest rates aren't going to come down much this next year. So if interest rates don't come down, then prices have to, or something has to happen, or nothing happens, right? That's where we see stagnation, where people are just not able to buy. It's an affordability issue. I think we're going to see more active units. I think we're going to see greater time on market. I think we'll definitely see some more buyers, but I don't see those numbers that Realtor.com is predicting to be realistic at all. Anyway, for more information about how all of this works and how we can structure the best deal for you, whether you're a seller or a buyer, please give us a call or send us a message. Thank you so much for your referrals, your support, and your repeat business. Appreciate y'all. Happy New Year.